All right, and we're live. Today is, we just talked about it, Wednesday, October 25th, and we still have a lot of earnings rolling in. Yesterday, Microsoft and Google reported earnings after the bell. And today, it seems that the markets are all about these earnings. So we'll take a look at this of what's happening in the markets, and we'll also show you our positions and how this affects our positions. So welcome to Coffee with Markus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. If this is the first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And Mark, I don't even know where to start today, whether we should look at the indices first or talk about these earnings, because they're super significant.
Honestly, today, Marcus, it's all about Alphabet down, 10-year up. But we could start with earnings.
All right, let's talk about earnings. And we did have Microsoft reporting earnings. So Microsoft reporting earnings better than expected. And jumping up here.
Sure, better than expected earnings per share, also better than expected revenue. So nice earnings beat, earnings win, and traders liking that news. Giving back some gains that we saw earlier in the session, but still up about 3%.
Yeah, and this mainly because they said, hey, their Azure cloud business is doing really well. So they're up. Earlier they were up as much as 5%, right now giving up a little bit. And then on the other hand, we have Google, and that is super surprising to me what's happening here.
Yeah, Alphabet, the artist formerly known as Google, down and taking a bit of a hit here. And this is interesting because they actually beat on earnings, they beat on revenue, but some concerns over their cloud computing growth.
Yeah, let's really dissect this because this, to me, doesn't make sense, and we need to take a look at this. So earnings per share coming out at $1.55 versus $1.45 expected. So better. Revenue coming in higher than expected. YouTube revenue coming in higher than expected. 11% revenue growth. And if you look at the previous quarters where we had single-digit growth, on the upswing.
Yeah.
So everything looks good. And then they're reporting that the cloud revenue came in below the estimates of $8.41 billion, missing the mark by around $20 million.
And when you're comparing billions to millions, although a million sounds like a lot, it's not much when you look at those numbers.
Okay, so this is $8,410 million, and they missed it by $20 million. This is kind of a rounding error. Does this really warrant Does this warrant the stock dropping so much, or is there more behind this?
Yeah, and accounting irregularity could definitely have fixed that if they had the right. No, just kidding. But yeah, is this an overreaction, Marcus, or a concern? What do you think?
I believe it is an overreaction because I haven't seen anything else in the earnings report. And if you have seen anything, please leave a comment of what am I missing here? If you're reporting a revenue for the quarter of $8,410 million, and you're missing it by 20, as said. Well,
yeah, especially to sell off 9%, right? If investors were looking at the cloud computing segment and really expecting more, thinking that's going to see much better growth, not only this quarter, but moving forward, but still to discount the entire stock and company when it seemed like a decent report.
It's Google. They have tons of revenue. Cloud computing is just one part of it. Anyhow, so it seems that this is sending down the indices lower. Super interesting this morning. The S&P 500 moving lower, and we talked about it here with our mastermind member, that 4,200 is probably the line in the sand, and it held up, and right now we're bouncing back going towards today's open.
Yeah. So a little bit of a bounce after the rough start, but I'll take that, and we'll see where we go from here.
Yeah, and this is where you said the 10-year yield, that is in focus again. So let's take a look at this. Interest rates this morning in focus. So first of all, long-term and short-term interest rates are rising, but the longer term definitely more. And right now attacking again the dreaded 5% level.
Exactly. So hit 5% earlier this week, pulled back, and now it's still in the spotlight, still in the focus. Everybody's going to be talking about it. And you're right there. The 2-year is slowing, the 10-year definitely outpacing that 2-year yield.
Yeah, so if you look at right now the yield curve here between 10-year and 2-year, I mean, again, approaching the zero mark. And just see it here. What really surprised me that Bitcoin just keeps marching higher. I mean, look at this. Is this next stop 100,000?
That might be a bit of a stretch, but definitely getting some interest from Bitcoin investors again after just being in ranges for a long time.
Yeah. Before we take a look at our positions, let's talk about a few other earnings that came out because still, I mean, Google and Microsoft today dominating the headlines, but we had a few others that are coming out.
Yes, and
Want to start with Boeing?
Sure, why not?
All right. Boeing reporting earnings.
Yes, a miss. So Boeing reporting worse than expected earnings per share, better than expected revenue. From my recollection, they did announce some concerns or delays on their 780, their MAX plane, but then their Dreamliner, I think, saw some increased production. So
yeah, and
a little mixed.
I mean, compared to the overall market, they're just down with the overall market because it's kind of mixed. So it's not really market moving here right now. But I mean, their Dow component reporting earnings this morning. Bank of America also reporting earnings.
Bank of America.
Oh, I thought no. This was a few days ago.
Yeah, it was. Was it Wells Fargo? No, I'm sorry.
Well,
that's your fault.
Yeah, of course. Oh, Visa.
That's
Visa.
right.
Okay, let's
after the
take a
bell
look
yesterday.
at Visa after the bell. Yep. So Visa today up against the market.
Yeah, and kind of a little bit all over the place, but better than expected earnings, better than expected revenue, and one of the Big 10 actually in the market. So nice that they're up.
Yeah. All right, let's take a look at overall what is the heat map showing us today. And today it's really tech being dragged down, Amazon down. Amazon is reporting earnings this week. I think they're reporting tomorrow, right?
Yes, tomorrow after the bell. Today after the bell, IBM and Meta. And interesting to see Meta down almost 2%.
Yeah, and I mean, I'm not too surprised with Amazon because Amazon is all about cloud computing. And since cloud computing right now is in the news, Microsoft cloud computing business better, Google worse. So this is where right now there's probably some nervousness. What will Amazon say? And I'm still trying to figure out what the obsession with the cloud computing is. All right. One thing that I wanted to ask you, the viewers, is since we are still here live in Cayman Island, so we're doing a show today and tomorrow. I don't know. Do you want to see a few pictures what our setup looks like and what everything looks like? If so, do us a favor and click on like really quick, and we'll count the likes. If you see a lot of likes coming in, we'll share some pictures with you. And in the meantime, we can take a look at the Steak-O-Meter or the FOMC meeting. So it is next week, in a week from now, exactly a week from now, and 2 hours and 51 minutes. And let's see where we stand. And again, please, yesterday I had a 0.4% probability of winning a box of steaks. Right now, this has completely disappeared.
It's gone.
And if you're a first-time viewer, so the bet that we have had on for several weeks is that I said the Fed will raise interest rates in the November meeting. Mark said no. And right now, this is the probability for the same. This is actually for lowering rates. Do you believe that they will lower rates?
No. I think that the Fed, we talked about it this morning in our mastermind meeting. I think that this Fed has been much more transparent than in the past, whether that's a good or bad thing. You could argue both ways, I think, but they have said, hey, we're willing to raise rates, but at this point in time, this hike for November, especially based on the longer dated interest rates and those higher yields going on the 10-year yield, that's basically doing work for the Fed that they have had to do their own. in the past.
Exactly, because if you think about it, the Fed hasn't raised interest rates or just once since May, so by 0.25%. But look at this, going from 3.4 to 5%. I mean, this is a dramatic move.
Yeah, because with the overnight lending rate, they wanted to make borrowing more expensive to help combat inflation. Now the markets are doing that.
Yeah. So, okay, let's see. How many likes do we have here? All right, there's quite a few likes. Okay, so a few things, just very briefly before we show you our positions. That's where we're at. I mean, this is an actual picture that one of our mastermind members has been taken the other night and sharing it with us.
That's a good one.
Not too bad, not too bad. This is the room that we are in, and in case you're wondering where we are right now, so this is our traders. We're right here. We're sitting right here in the back, and I even have a picture of this so that somebody took of us. Here we are.
Nice.
Yay. So this is what it looks like from the other side, and last night we had our cocktail reception here. I mean, it was just a gorgeous night. And
yeah, it's an awesome place.
We're here with a fun group hanging out under this beautiful sky right here. Hey, we can't complain.
Not
loving it
at all.
Okay. If you're jealous, leave us a like. Okay. All right, let's take a look at our positions and see where we are with our positions here. And today, not too surprising if we look at CSIQ with the rising interest rate. Actually, I mean, kind of hanging in there, but still down 1.3%. But that's pretty much in line with the markets.
Exactly. I'm really liking how it's behaving for a rescue.
Yes.
So I have not pulled the trigger on a rescue yet, but I like that even with that SEDG reaction, we're seeing some more orderly movement and some support. So I'm definitely keeping an eye on this.
Yeah, it seems that support is around 20, and that would be a good level here for a rescue mission, right? So, yep, we're keeping an eye on this. Talking about rescue missions, I'm skipping over Goldman Sachs for a moment, but NEE, I mean, NextEra Energy, after issuing some warnings and saying, hey, we will not grow, and the stock dropping a lot, there was a quick bounce, then pulling back before earnings. Yesterday, earnings were announced, and people loving it, up 7% today, following through in a falling market with being up almost 3%. I mean, liking this, we talked about it this morning. I believe that we can go towards 59.60, somewhere around there. Then we will probably consolidate a little bit, and then we have the next run up. Just because there will be probably some profit taking after this run up. So we will not go straight up. I mean, it would be fantastic. But I believe us to get some consolidation between 58 and 60, and then making the next push higher.
Yeah, that makes sense, and I'll take it.
All right, so that's a good one. So here, kind of, mixed feelings. We love it that it's going up, but we haven't been able to fly a rescue mission on this one, which would be nice because this would have probably brought our cost basis down to around 60, 61, and we would get closer to call selling territory. So we're hoping for the same here for CSIQ after we fly a rescue mission. All right, skipped over Goldman Sachs, so let's take a look at Goldman Sachs here. Super interesting this morning. A little bit of a slide, but right now pushing back towards the 300 level that has been here. A little bit of a level that Goldman Sachs likes to hang out at.
Yeah, and we're at 305. Our break even's nice with the premium we've collected on those puts and calls. So, I mean, this one is working out just fine, but it does look like traders are attracted to that 300 level.
Yeah, but I'm okay because we sold the 305 calls earlier this week. So they will probably expire worthless unless we have a massive rally here in the next few days. And so we can sell calls again, hopefully next week. That's the plan here.
Exactly. I said it earlier this week. I think we could have fun with this one for a couple of weeks.
That would be fantastic, yes. And then we have PNC. PNC today, hanging in there pretty much with the overall market, going a little bit down, liking this level. So that's another level at around 110, 108, maybe considering a rescue mission. Let's just see if this stabilizes at this level.
Like to see that.
All right. And then UPS. So UPS has been a wild one over the last few days. And with UPS, we have earnings tomorrow before the bell. And we're seeing a little bit of weakness into earnings. Today, where are we? Down 1%. That's pretty much in line with the overall market. So This will be interesting to see what happens here. Of course, we are hoping for a push higher. I got assigned at 157.50. Sold some calls against it, so they probably also expire worthless until we see a huge jump. You got assigned at 165.
Exactly.
But, yeah, I mean, let's see what happens with UPS tomorrow.
Yes, and expected move about 5% up and down, so 155-ish on the upside. It's unfortunate that it's dipping a little before earnings, but I still think that we could get back to those support levels.
Yeah.
What was support, resistance, possibly, but we'll see.
Yeah, let's see. What is FedEx doing? Just to see. Yeah, pretty much the same.
Yeah.
Even showing a little bit more weakness today, down 1.8%. So, yeah, tomorrow the
It's
big
the day.
day
Yep.
for UPS. All right, let's see where the S&P 500 is right now. As we are continuing here, and we're switching to a 5-minute chart, and it seems that we are clawing our way back. I mean, right now, just slowly going back up towards the open that we had here. So what do you think? Will we end the day positive?
I think so.
Really? I don't think so.
Do
you think it goes all the way back?
Okay, well, let me. I would not bet a box of steaks on it.
Okay.
So I have to clarify that, so I don't have the conviction behind that decision. But I think we could drift higher.
I mean, this would be another 0.6%, and we have been down, I do believe, at around 1.1%. So a comeback of more than 1.1%.
I'm just going to throw it out there. I'm going to throw it out there. I know, but that. So okay. Even if we get close, I'll take it as a win. But it does look like 4,200 some support.
Hey,
I'm okay with close. 4,200 support looks like traders like that. How about this? Will we be between the open and positive?
Yes, but this is not close.
Okay.
Okay, well, you got to see how this ends. So we'll settle this debate tomorrow when we are live again. So if you enjoyed today's show, give us a like. If this is your first time here, consider subscribing, hit the little notification bell. And if you think that this was valuable enough to share with others, please do share it with others. We appreciate it. Anyhow, we'll see you again tomorrow. And this is where we settle the debate about how close is positive for the day. It's above zero.
It's going to be an organic move higher, I promise.
Okay.
Nice.
All right. See you all tomorrow.
Happy trading, everybody.